Let's welcome on board Madan Sabnavis. He's the Chief Economist at Bank of Baroda, joining in on the show right now. Madan, great to have you on the show. Thank you so much for your time today. Just wanted to understand what stood out for you in the IMF commentary, and especially with regards to what the India points were, that we're going to grow faster than the rest of the world.
See, India has always been the fastest growing economy for the last couple of years, so that's not really a surprise. Now, this upgrade from 6.2 to 6.4% is also very much expected because we at Bank of Baroda have a forecast of 6.4 to 6.6%. So numerically, I think it's not really a surprise. But what really stands out from the IMF's commentary is that they're actually talking in terms of financial stability, number one. Second, they're talking also in terms of the fiscal balances being very much in order and something which has been progressive. So I think these are the two factors which have really contributed to this kind of an upgrade. Of course, there's a general thing which they have spoken of for the world economy, which is more on lines with the tariffs which were imposed and later on they have been deferred. So there has been an upward push for exports across the world in those particular 3 months. That is the first quarter of our fiscal year, which is what we're seeing in other countries too. And as usual, they have raised the red flags of saying that, okay, now from August 1st onwards, we're not quite sure what could happen. So therefore, there could be a slight downside. But even global growth forecast has been upped marginally by the IMF. And I think it's essentially because what we thought in April could be the tariff impact is probably going to be less potent now because there have been negotiations taking place with different countries. India is also on the verge of striking a negotiation with the US. So I think what was announced in April and what we may probably see from August onwards could be very much different, much more sober. I think that's the reason why overall the outlook seems to be positive for the rest of the world except the US.
All right. But Madan, yes, of course, the outlook for India is also looking quite good, and the IMF is projecting a growth figure of over 6%. But do you believe that there is any upside risk to India's GDP forecast as well?
So I think the upside risk, rather the downside risk to India's GDP forecast could be more on the domestic front. Even here, I don't really see it really happening because I think the usual concerns about how agriculture would perform, I think that seems to be very much on course to be normal. We are also talking in terms of a revival of domestic demand. This, to my mind, is something which we will see more in the second half of the year, probably from August end onwards, because that's when our festival season starts. So I don't really see any downside risk as such to the India growth story. We would be in this region of 6.5%. And to my mind, I will not be surprised if RBI also maintains the forecast of 6.5%, which they had earlier for the Indian economy in the policy which they announced in the month of August.
Right. And Madan, in terms of the IMF commentary, they've also noted that US inflation is picking up and the pass-through from tariffs and weaker dollar could be something that's impacting that. What type of a spillover could this mean for emerging markets, especially our Indian economy?
So actually, we're looking in terms of inflation going up in the US. I think, yes, that'll be the only pocket which is going to be affected by higher inflation. But let's look at it this way. Any higher tariffs which are going to be imposed by the US, they're saying the average is going to go up from 3.5%, which was what it was on an average basis, to something of a minimum of 10%, maybe going up to 15%. Since US is also the largest importer of goods, this would mean that automatically there will be an upward push to domestic inflation. Now, what this would mean for the US is that the Federal Reserve will have to hold on to the rate cuts. And as long as that happens, there will be this uncertainty in the market. And this is something which will translate to other countries also. Also, we have seen that this kind of a situation in the US would tend to keep the dollar weaker, which means that there could be some kind of pressure in terms of managing currencies for the emerging markets. And even for India, I think we will have to be very cognizant of the fact that in case the dollar remains weak, bond yields remain higher in the US for a longer period of time, then definitely there could be a case of saying that your foreign investment flows could be affected, which in turn could actually mean that there would mean some realignment which has to take place on the external front. So to put it simple, this kind of a situation in US will lead to more misalignment as far as currencies are concerned, and that would be a concern for emerging markets.
Sure. Madan, two things which still seem worrisome, and that's exactly what the IMF also has spoken about. A, the tariff rates, of course, and that when it comes to India still remains a